I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX and on the OTCQB symbol PWWBF and on Frankfurt symbol 1ZV. For more information, please visit us at powerbandsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. Welcome back to the show, Steve.
Always a pleasure. Thanks for having me on.
Steve, what are you seeing in the just-released real estate April stats?
Just pretty much a continuation of the slow start that we've had at the beginning of the year here. Obviously, everybody knows the January, February, March numbers. So April is pretty much just a continuation of that. We had, depending on whether you're looking at the Canadian Real Estate Association's numbers or the Real Estate Board of Greater Vancouver, but it looks to me like 19-year low for April sales across Greater Vancouver. It was an 18-year low just for the condo sales. I think record lows for the detached single-family home sales. So there's still some more weakness in the detached segment than there is the condos, but just weakness in general. Interesting enough is if you actually look at first 4 months now, so January through April, we have a good 4 months data set here. If you actually compare that going back historically, this is actually the slowest start to any year. So the slowest start through the first 4 months since 1986. So we have a 33-year low to start the year. And so, I think that's obviously something to watch here moving forward.
Well, I remember 1986, we had Expo, we invited the world, and the next year, the world decided to move in. And that really boosted real estate stats since then, didn't it?
Yeah, so I don't know if we have anything planned moving into 2020, but perhaps maybe some policy changes to turn things around. But as it stands right now, I don't see any appetite from any levels of government to make those changes.
Right. So their whole plan was to drive down prices with their foreign buyer tax, their empty home tax, their speculation tax. It seemed if you're a property owner, the NDP government really wanted to punish you. Yeah,
and you got the mortgage stress test on top. You got higher interest rates. So it seems that all those factors have sort of come into play, and and obviously Chinese capital controls and whole whack of things all coming together at once that are definitely slowing this housing market for obvious reasons. Yeah, it's a good thing we don't have canola growers or hog farmers in Greater Vancouver, or they'd be getting whacked from China as well. Yeah, exactly. So, but we're obviously pretty real estate focused here, so it's lean times for those in the industry. How do you think things might go in the future, or are we just sitting here looking at a dismal market that could fall even further? I mean, realistically, there's likely more downside to come. I mean, typically volumes lead prices. So anytime you have, 20, 30-year low in sales, that just allows the inventory levels to build. And so they're still building. So there's more inventory for sale. Buyers are very picky, and all the buyers are obviously right now looking at the headlines and the sales figures coming out. They're very nervous and hesitant, and most of them are wanting deals and discounts, and so that's being reflected in the offers and the sale prices that are actually happening. And so, I think that, and I suspect that we'll be in a low sales volume period for quite some time, and that's just going to weigh on the prices. Somebody told me the cure for high prices is high prices. Did that turn out to be the truth? Yeah, it's always how it goes. You get these high prices and you get some sort of political backlash, and that's usually when governments step in to come in, and they usually come in at the wrong time, and so that's usually how it works, and that definitely seems to be playing out pretty textbook right now. So no appetite at all to ease up on the market? Yeah, no, if you read into the policymakers, I mean, I like interesting always going on Twitter. You look at what Carol James is saying, what David Eby is saying. What the head of CMHC there is saying, what the Bank of Canada, Stephen Pelosi, is saying, and they're all, Pelosi at the Bank of Canada is saying, housing looks good, it's adjusting, but the fundamentals remain solid. We're happy with the stress test. We feel it's improving the quality of the debt. So obviously when they're coming out publicly and making those statements, it's usually not a sign that they're going to suddenly remove the stress test tomorrow. And certainly same thing with Carol James, commenting and saying that the recent easing in the rental market and in home price affordability is encouraging news, and they're happy that they've got quote unquote the speculators out of the market. So if you just look into their words, at least what they're saying publicly, doesn't seem to be any sort of inclination that they're going to be switching policies anytime soon.
Isn't it an indication when real estate starts to fall, though, that the economy is going to fall and people are going to lose jobs, so they won't be able to afford homes anyway, no matter what the price?
Yeah, I think that's certainly partly true. I mean, obviously, a deep recession is not good for anybody. But I don't know. It's tough because I don't know how you really reach realistically a level of affordability without a significant decline in home prices. And that unfortunately does come with quite a bit of pain, and there is knock-on effects obviously on the economy, the labor market. But it's tough. I mean, there's not really a way. I know that the developers, will tell you that, just let us build more houses and that will somehow, that will create all the affordability that we need. But, it's just, you can't just simply target supply side. You have to sort of look at the demand side, and a lot of that comes down to mortgage credit in the credit market, and that's really what drives not only home prices but also GDP and economic growth.
We'll have more with Steve Saretsky right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what's the latest on high-end homes in West Vancouver and on the west side of the city of Vancouver?
From my studies of it over there, and obviously speaking with a lot of other realtors as well, just to put everyone's got different views and opinions, but yeah, there's significant weakness in that market. I mean, I would say like West Van, like high-end market, that's pretty much gone no bid. So if anyone doesn't know what that means, it's basically there is no bids, right? Even if you drop your price by $1 million or $2 million, there's no guarantee that you're actually going to get an offer. And so kind of like the offer that does come in, you almost kind of have to take it or you just don't sell. So the buyers are just clearly in the driver's seat over there. It's really not a very good, healthy environment to be in at all when luxury homes go no bid. Very, very concerning to see that sort of dynamic playing out.
Are any low bid offers being accepted now?
Yeah, we saw one last a couple of weeks ago. I guess I can discuss it now, as I think it's public records now. But there's one I think in West Van. I think the guy bought it at the peak of the market in 2016, and I think he paid $11 million and just resold it for 5.5. So that's probably the steepest drop or decline that I've heard of, that I've seen. Obviously a 50% haircut there. But there's more stuff going on behind the scenes. I don't know. I can't really comment or speculate on that. But in terms of drops, that's probably the steepest one that I've seen to date.
Are foreign owners becoming motivated to sell?
Yeah, I mean, I don't know. My belief is there's still arguably net sellers and not buying. So they're probably selling more than they're purchasing today. So again, that's impacting like the luxury markets. There's a lot of more rules and regulations coming out. Obviously, BC is looking at, I believe they've put into legislation now to show hidden identity in beneficial ownership, so that sort of creates more transparency in the market, and obviously releases the identity of a lot of these owners that probably don't want to be named for various reasons. I think China's still looking to repatriate some of their capital, and so there's a lot of stuff that's sort of happening behind the scenes right now.
Are some foreign owners now? There's always the question: if they were a foreign owner, were they investing and just trying to get their money out? And even if prices fell here, they were still happy to have the available cash, I guess, if they need it. And it's a long-term investment, so even if it fell, they were going to hold on to it. Do you see that kind of attitude by foreign buyers? They're just happy to hold on and they're not interested in selling.
Yeah, there's definitely a lot of those people too. Right? I don't think anybody's in like one particular basket. I think there's like definitely different types of people and different types of investors, and some of them are here for the long term, and they don't really care about price fluctuations here over the next couple of years. Yeah, I mean, certainly for some of them, especially in the high end, right? I mean, sometimes it's just a matter of, hey, I just want to get money out of China and get it into real estate here, get a loan, and even if you take a loss and you got to resell, like it's just the cost. It's just the cost of getting money out. It's the cost of basically doing business. So that's I've heard a lot of stories, in that sort of context. So yeah, it really just depends on each, but there definitely is still a hunger and appetite to get money out. It's just become extremely difficult to get it out these days. Like I said, heavily scrutinized. Obviously, the trade war has a lot to do with it. There's a lot that's happening in China. I mean, they're running, I believe, a current account deficit right now. And that all matters as the U.S. dollar seems to be still ticking higher here, right? So, you're almost going to be in a bit of a currency crunch over there. So that's basically the large premise behind the capital controls. It's really just trying to keep everything stable overseas.
We'll have more with Steve Saretsky right after the break.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, what is the psychology of buyers and sellers in a down market?
I think the sellers are obviously frustrated. I mean, 33-year low sales to start the year. Obviously, there was a lot of people that were banking on the spring market to sort of get them out. There was a lot of hope and optimism that, the correction would be sort of short-lived, and, spring 2019 would kind of be, would bring some liquidity and get people, sold and they could sort of move on. But we've seen March and April come in to be extremely weak months. I suspect May will probably be something quite similar. So, the spring market is pretty much disappointed. I mean, I don't know how that projects here moving forward, into the summer months. If you can't sell in the spring, it becomes even more challenging in the summer. So it likely leads to more price reductions, which I think is encouraging news for the buyers that are, a lot of them on the sidelines right now. Like, there's definitely a lot of people that are out there active and looking, some of them making offers, but just trying to get them to stick and get a price that they're actually comfortable paying is a trickier process right now, but that's kind of what we're seeing from both angles right now.
How tough is it to get a mortgage in Greater Vancouver?
That's, I think, the one thing that I would say is I don't think it's definitely gotten more difficult, but I don't think it's like a liquidity, like a credit crunch where, like, okay, like in the U.S., 2008, 2009, like even if you wanted to get a mortgage, you couldn't get a mortgage, right? Like the banks were basically, just trying to stay alive. Whereas like here, I mean, it's still relatively, in my opinion, it's still relatively easy to get a mortgage. Like there's still lenders out there, still banks out there that are actively looking to grow their portfolio. You're seeing some of them engage in rate wars, mortgage rate wars. So some of them have been reducing their mortgage rates to try to get some growth in their mortgage portfolio. So there's certainly still some desire from the banks to lend money, and so the financing has definitely gotten more difficult, particularly for homes above $1 million that they can't be insured. They're a little bit more cautious there. I mean, if you go into the high end of the market, a lot of them, some of them won't even give you a mortgage, just because they perceive it as being too risky. But yeah, I would say in general terms, it's still quite liquid.
With banks constricting credit and buyer-seller psychology, how tough is it to get a deal done?
I think that's the most challenging part, is just because you have sellers that are so emotionally anchored to what their home is worth or what it was worth or what it should be worth. And then you have, obviously, again, the buyers saying, well, hey, there's no sales. Look at the 33-year low sales. Why am I being told what I should pay? I want to pay, this price, and if you don't want to accept my offer, then I'll go to the next house and I'll make a bid on the next house. So it's like you literally have buyers, like, I can speak even specifically for some of my clients, like they highlight 5 homes. They say, okay, well, we like these 5 homes. So they go to home number 1, they make an offer, maybe they get a counter back, maybe they don't. They say, oh, okay, no, not interested, too high. They go to the next house, then they go to the 3rd house, and they go to the 4th house. So, the buyers, especially in the detached housing market, are definitely in the driver's seat, in terms of they just basically go out there and you see who wants to play ball.
Are foreclosures on the rise?
Statistically, like at least from looking at the data, no. They look like they've bottomed. We definitely are seeing more foreclosures, like in West Vancouver, like especially like in the high end of the market. They're definitely seeing an uptick there, no question about it. But like from a broader level, like when you start including like whole of Greater Vancouver with the condo segment, the foreclosures are still very, very low. It looks to me like they've likely bottomed and they'll probably start to increase, but it's more of like a lagging indicator, because the foreclosure process is very long. It's a long, drawn-out process here in BC, but you are starting to see, I think you look at some of the big banks' filings, you're starting to see their rise in delinquent payments by 30, 60, 90 days. You start to see that those tick a little bit higher. So,
is it true the banks really take their time when it comes to foreclosures? They'll wait a year and a half, 2 years before they actually take action?
It's usually not that long. I mean, I think that they've been a little bit more accommodating over the last couple of years, just because, like, the market's kind of been going up. There's really just less perceived risk, right? So they'll let you catch up on your payments. They'll give you a whole bunch of opportunities to sort of get caught up. But I think now, as the market's starting to slip and there's more perceived risk for them, I think they're becoming a little bit more, putting a little bit more pressure on people to get caught up. But yeah, certainly it is a very drawn out process here. It could easily be 12 to 15 months turnaround by the time you have a delinquent payment, at the time you actually can go through the whole court process and foreclose. It is a very long process.
Is it hard to sell your property with sales so slow? Because I know in the past when the market was booming, if you faced foreclosure, you probably could have sold and perhaps covered the debt. Can you do that anymore?
Oh, I mean, that's the problem. I mean, I'm just fascinated. My job has just become increasingly fascinating just to watch how the market is shaping up. I mean, every day there's something going on. I think one of the things I'm keeping a keen eye on is just the number of foreclosures. Again, talking like in West Vancouver, where prices have dropped off precipitously. and there's really no liquidity, because you're seeing a lot of the foreclosures are basically private lenders. A lot of them on 1-year loans. A lot of them are second mortgages that are taking tremendous losses just because, again, there's no liquidity. Prices have dropped, 30-40% easy, and that basically has eliminated any sort of equity position that the second lender would have, right? So these guys are taking big losses, and they're going into the foreclosure process, but even for them to sell that foreclosed home in West Vancouver, it's not a quick turnaround, right? I mean, it could take easily several months to get a foreclosure home sold in West Vancouver.
We're hearing that the high-end car market peaked with the high-end housing market in Greater Vancouver. What are you hearing?
I have to look through the high-end numbers. I think like someone was joking and saying the Maserati sales are way down, but if you look at from a national perspective, like De Rossier's put out a monthly report on Canadian auto sales. So I think Canadian auto sales for 13 or 14 consecutive months have declined on a year-over-year basis. So there's no question that like peak autos are definitely behind us, and that a lot of that is obviously tied to rising home prices and that wealth wealth effect from rising home prices. Obviously, your home's going up. You go out there and you buy the new car to go along with it. So we're starting to see auto sales have come off quite a bit. I speak a lot with some of the consumer insolvency people, which basically handle bankruptcies for households and whatnot. They definitely have told me that they're seeing an uptick in that. There's one of the bailiff guys was telling me that they're starting to seize car leases and that sort of thing. I think that sounds about right.
Steve, thank you so much for chatting with us.
Yeah, thanks again, Jim. I always appreciate it.
My guest has been Steve Saretsky. He's a Vancouver-based realtor. You can find him online at stevesaretsky.com. If you have any questions for the show, you can send them to info@howstreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.